Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, October 17, 2013. Thank you all for tuning in. Let's jump right into the charts. We're going to start off with the S&P 500 E-mini futures. You're going to see that the futures are trading lower by about 4 points at the moment to 1709 and a quarter. It looks like the market's selling off a little bit after the government decided that they will make a debt deal. I believe this deal is good until January or so, but I don't know the specifics. But either way, the government is reopened, the debt ceiling is lifted, and the U.S. is going to print and spend more money. So that's basically the bottom line, how it works out. Markets seem to rejoice into it. Now you're getting a little bit of a sell the news event. Not that big a deal. It's only down about 4 points at the moment. We'll see if it does go lower. The bigger news today, though, is all of the earnings that are coming out. Goldman Sachs, big, important investment bank, really a pseudo hedge fund if you ask me. But either way, the stock is getting hit a little bit today. Closed at 162.27. It's trading down at 158 a share right now. Goldman beat on the top line, raised their dividend, but missed big time on revenue. So again, just following the theme that we've already seen. Remember Stanley Black and Decker yesterday. SWK, one of the largest tool makers in the world, was just annihilated, but hardly got any press in the media. So when you see Goldman today, Goldman should be a little eye-opener for people, saying, hey, what's going on with these revenues? What's going on with all these earnings? These earnings are not so hot. So Goldman down pretty decently, down about around 4 points or so. We'll see if that one does go a little bit lower. I might have some Goldman levels, but they'll be posted up in the chat room around 9 o'clock in the morning for those of you that want to trade it. We do have quite a bit of gap trades already, just so I get that out there. There are quite a bit of gap trades already that I have set in motion. Looking over at a few other stocks in motion today, IBM getting slaughtered. IBM missed on every metric. Stock is just getting annihilated. Closed yesterday at, I believe, 186.18. Today it's trading at 173 and actually can go a little bit lower. So IBM is not a pretty picture right now. Real good sell-off in IBM. And again, we'll have gap levels for that one as well. But this is another market barometer stock that's just telling you things are not so rosy out there. To add insult to injury, let's go to eBay. eBay reported earnings. This stock's getting hammered as well. It closed yesterday at around 153.50. Today it's trading at $50.20. So eBay's down. They did not have good things to say. We'll have some gap levels for eBay as well. So again, a lot of stocks here getting hit pretty sharply in the pre-market, and we're not even done. Let's take a look at VMC. VMC, Vulcan Materials. Now this company makes stone and granite. Now there's no volume here, so I'm not sure if this fake print if this is a fake print or not. But if Vulcan is down, that's really telling us something. I'm showing it down in my pre-market screener, but really there's no volume here, so I'm not going to make too much out of it. But this company makes concrete pebbles and stones and things like that. So if Vulcan is lower, then there really could be a theme here. Talking about the housing market and the consumer spending, but I'm not really 100% sure if Vulcan is down. But either way, we will have some gap levels if it is, so keep an eye on that. Verizon was a little ray of light. Verizon is up a little bit. The stock closed at 47.25. They reported earnings. Their stock's trading up at 48.25 at the moment. In the pre-market, did get as high as $49. So Verizon still looks pretty decent here. Verizon's one area, obviously, with cell phones and all sorts of digital television. They're doing okay. So that's one area that we could watch for, showing a little bit of strength in the market. Let's take a look at our commodities here. Oil. Let's go right to the oil market. Oil this morning, light sweet crude is trading lower by 56 cents. Not a big deal. It's at 101.73. If we take a look at USO, which is a good proxy for light sweet crude, you'll see that's trading just under the 37 level at $36.94. So we're not going to make too much out of oil today. I guess USO is somewhat in a range. Same thing with light sweet crude. Right now, we'll see if it just starts to gradually move lower, but at the moment it's still holding some support in this general range, general area. When we look at gold today, gold is soaring, roaring, popping, whatever you want to call it. Gold is up $35 at the moment to 13.17 an ounce. Big soaring move on gold. Let's take a look at the GLD. The GLD closed yesterday at 123.54. Today it's trading at 127.12. So huge move today for the GLD. That's a big move. That's a very impressive move. With this kind of move, if the GLD can hold it, it has much further upside on the daily chart. So pretty good move today, and this all comes on the back of the debt ceiling being raised, and it all comes on the back of the government shutdown reopening. So again, gold is soaring, roaring, taking off. Tremendous move to the upside. Gold, it looks like it has legs here if it can hold for the day. If it holds for the day, it definitely has more upside to come. So that's what we're looking at. There's a ton of earnings out there today, so you want to just really focus in on the first couple of hours. We're going to get some real good volatility out here. Futures are down about 4 points at the moment. We'll leave it here, short and sweet today, but come over to the chat room, to the trading room at 9 o'clock in the morning. We'll have all the gap plays posted for you, and we'll see how it all plays out. But again, we'll watch and see how this market holds today, if it can hold up, and then tomorrow we'll see what it brings us. With that said, everybody, God bless, have a great trading day, and we'll see you on the charts.